Welcome to my channel, Wealth Ledger.
Understanding how to read a stock chart is one of the most important skills every investor and trader must learn. Stock charts can look intimidating at first glance, filled with lines, colors, numbers, and strange patterns. But once you know what to look for, these charts become powerful tools that reveal the story of a stock, its past behavior, current performance, and even potential future moves. In this video, we'll break down everything step by step so you'll never look at a stock chart the same way again. Why stock charts matter? Let's start with the basics. Why even bother with stock charts? Stock charts show us how a stock's price has moved over time. Instead of just looking at numbers in a table, a chart gives us a visual snapshot of trends, patterns, and momentum. Think of it like a map. It helps you see where the stock has been, where it is now, and gives clues about where it might go. For long-term investors, charts help confirm good entry points to buy shares. For short-term traders, charts reveal opportunities for quick profits. And for beginners, they provide clarity, helping you avoid buying into hype or panic selling during dips. Step 1. Understanding the axes. Every stock chart has two axes. The vertical axis, y-axis, shows the price of the stock. The horizontal axis, x-axis, shows time. So, as you move from left to right on the chart, you're moving forward in time, and as you look up or down, you're seeing price changes. This simple foundation makes it easier to understand everything else we'll cover. Step 2. Price representations, line, bar, and candlestick charts. Stock charts come in a few different styles. Line charts, the simplest form, showing one continuous line that connects closing prices over time. Great for beginners because it's easy to read, but it lacks detail. Bar charts, these show more information. Each bar includes the opening price, closing price, and the highs and lows for that day or period. Candlestick charts, the most popular and informative type. Each candlestick shows the opening, closing, high, and low price. A green or white candlestick means the stock closed higher than it opened, while a red or black candlestick means it closed lower. Candlestick charts also form recognizable patterns that traders use to predict future price movements. Don't worry, we'll touch on some of those later. Step 3. Time frame. Stock charts can display different time frames depending on what you want to analyze. 1-minute or 5-minute charts are used by day traders to catch quick moves. Daily charts are popular for swing traders and long-term investors. Weekly and monthly charts give a big picture perspective of long-term trends. For beginners, I recommend starting with daily and weekly charts. These show enough history to spot meaningful trends without overwhelming you with short-term noise. Step 4. Reading volume. Below most stock charts, you'll notice vertical bars called volume bars. Volume tells you how many shares of the stock were traded in that time period. Why is this important? Because volume confirms strength. For example, if a stock's price rises sharply but the trading volume is low, it may not be a strong move, it could fade quickly. But if price goes up with high volume, it shows lots of interest and conviction from investors. Think of volume as the fuel behind price moves. Step 5. Identifying trends. Now let's talk about spotting trends. An uptrend is when a stock makes higher highs and higher lows. This shows strength and increasing demand. A downtrend is the opposite, lower highs and lower lows. This indicates weakness. A sideways trend means the stock is moving within a range, neither rising nor falling significantly. Recognizing the trend helps you decide whether to buy, sell, or wait. Remember the golden rule. The trend is your friend. Step 6. Support and resistance levels. Two key concepts in stock chart reading are support and resistance. Support is a price level where the stock tends to stop falling because buyers step in. Imagine it like a floor that holds the price up. Resistance is the opposite. It's a level where the stock struggles to rise higher because sellers appear. Think of it like a ceiling. By identifying these levels, you can better time your buys and sells. Buying near support and selling near resistance is a simple but effective strategy. Step 7. Moving averages. Moving averages are lines added to stock charts that smooth out price data, making trends easier to see. The 50-day moving average shows the average price over the past 50 days. The 200-day moving average shows the long-term trend. When the price is above these averages, it often signals strength. When it's below, it may indicate weakness. Many traders also watch for the golden cross when the 50-day crosses above the 200-day, signaling bullishness, or the death cross when the 50-day drops below the 200-day, signaling bearishness. Step 8. Chart patterns. Over time, traders noticed that certain shapes or patterns appear repeatedly in stock charts. These patterns often give clues about what might happen next. Head and shoulders often signals a reversal from an uptrend to a downtrend. Double bottom suggests the stock found strong support and may rise. Triangles can signal a breakout in either direction, depending on volume. Patterns aren't foolproof, but they add another layer of insight to your chart reading. Step 9. Candlestick patterns. Candlesticks also form patterns that hint at future moves. Doji, when the opening and closing price are almost the same, signaling indecision. Hammer, a candle with a long lower wick, often signaling a reversal from a downtrend. Engulfing pattern, when one candlestick completely engulfs the previous one, showing strong momentum. Learning these patterns can give you an edge in spotting opportunities early. Step 10. Putting it all together. Let's bring everything together with an example. Suppose you're looking at a stock chart. The price has been trending upward, making higher highs and higher lows. The stock recently pulled back but found support at its 50-day moving average. Volume increased as the stock bounced off support. A bullish candlestick pattern, like a hammer, appeared at that level. All these signs together suggest the stock might be ready for another move upward. That's how chart reading helps you make smarter decisions, not by guessing, but by analyzing signals. Common mistakes to avoid. Before we wrap up, let's cover a few mistakes beginners often make when reading charts. Overcomplicating. Don't clutter your chart with too many indicators. Keep it simple. Ignoring the bigger picture. Always zoom out to see the overall trend before making a decision. Forgetting fundamentals. Charts are powerful, but they're not the whole story. Combine technical analysis with fundamental research. Chasing hype. Just because a stock is spiking doesn't mean it's a good buy. Always check volume, trends, and support, resistance first.
Thanks for watching video. Please share with friends. Subscribe, bell icon, and share.